Hello, everybody. Simon Dixon here. I am here with Famida from the Bank to the Future team to take your questions on the crash, the crisis, anything, the crypto, recession, whatever you want to take, ask questions on. Challenging times, obviously. So I wanted to go live. For the past week, I've been just trying to get back home. I've cancelled all travel, obviously. I'm not the expert to ask questions on coronavirus. I can just tell you a few things that I've been doing, and then we can get straight back into the markets, finance, crypto, crisis, crash, and any of your other questions that we might do. So my movements over the last week, I did have a bunch of travel planned. I decided to cancel all of that as a precautionary measure. And I am now back, but unfortunately, I'm currently very bad timing in the midst of doing a lot of work on my house. So I'm still here in the hotel, and the types of things I'm doing, I've been wearing a mask to not just protect myself, but to make sure it protects others. I've been using one of these sanitization things every time I touch something, just to make sure that as a precautionary measure, and just making sure that we're doing all that I can in these really challenging and tough times. So that's the corona side, but obviously the crisis has had a serious impact on the markets. When people can't work and when business cannot continue as usual, it has impact on our financial markets. And if you've been watching any of my videos over the past months and years, in fact, the very first video that I published was approximately 10 years ago on YouTube, and some content before actually Bitcoin was created as well, on when I was part of the monetary reform community before joining the Bitcoin community. And I talk about the fact that there will be some kind of event, and we don't know what that event will be, that exposes the weakness of our financial system. And our financial system, for those of you that are familiar with my content, comes down to when I wrote the book all those years ago, started writing the book in 2010, Bank to the Future, Protect Your Future Before Governments Go Bust. I talked about three problems with traditional money and traditional financial system that creates systemic risk in the entire financial system, that perpetuates a Ponzi scheme of debt in order to keep the economy alive, which is regulated by the world's largest regulated Ponzi scheme called traditional fiat money. And I talk about these three things, which is the fact that when you deposit your money at the bank becomes the legal owner of your money. When they become the legal owner of your money, they can spend it as they choose, and they can censor it as they choose and decide whether you can spend it in the way that you want to spend it, or they tend to spend it the way that they want to spend it. And the third is that money creation happens every time a bank issues a loan. And therefore, in order to grow the economy and have more money in the economy, you have to increase the level of indebtedness in the economy. And increasing the level of indebtedness increases the money supply, and politicians always have an incentive to use financial engineering to prop up a banking system so that more loans can be issued. And when more loans can be issued, you create economic prosperity as the money supply increases, and it also dilutes people's savings as the money supply increases. And so these are the realities of our financial system. It's been built up with decades and decades and decades of financial engineering. Every time we hit a systemic risk event, a new type of financial engineering comes in place in order to get more people into debt, more companies into debt, more governments into debt, and then other government quasi-private institutions like central banks to take on the debt in times of crisis. And so what I was talking about on my channel for a long time is that there will be some kind of event. It could be a credit card crisis. It could be a student loan crisis. It could be like we saw in 2008, a tiny little event where investment bankers took over a small island of a couple of 100,000 people like Iceland. And that exposes the weakness of the financial system, which then triggers off some of the larger Ponzi scheme type of things that are operating in our financial system, like subprime loans we saw in 2008. The problem is that we always solve the problem with more debt. And so that is where we are as a financial system. The latest event seems like the trigger. And the trigger will expose the financial system for its weaknesses, but it hasn't done that yet. And that's because during this time of crisis, governments need to push more and more resources into a hyper exposed health system, because more and more people need treatment, and therefore they're going to have to come up with more and more financial resources. And normally the way that they'll do that is emergency, like we've seen in Trump's latest announcement that they're under a state of emergency, which means that billions need to be pumped into the healthcare system. That money will come from money printing. It will come from quantitative easing, or it will come from other types of money printing, which dilute the money supply further and create more indebtedness, and expose the financial system for what it is. So when you're in a moment of crisis like we are in right now, where people are more focused on health and survival, then you tend to have drastic measures in order to do that, which is obviously the right thing to do. But eventually that has consequences on the financial system. And then we as individuals need to decide where we're going to speculate our financial resources, because you have two choices. And that is, one, the speculation is done for you, i.e. you put your money at a bank and they spend the money for you and determine where the money goes. They take control of your money, and then you're at the risk of the bank's exposure and their credit risk. Or you decide to speculate yourself, and we now have options that we've never had before, like cryptocurrencies like Bitcoin, which has the opposite effect, whereby you can spend it as you choose. When you own Bitcoin, you actually own it, so there's no middle party there to decide or take that away from you. The second thing is the opposite of that. You can spend it as you choose. So in times of crisis, if you need to get money to China, then Bitcoin still flows to China. Bitcoin flows wherever someone is willing to receive it. And also the economics do not change. And that is that there is a fixed supply of these Bitcoins. In times of uncertainty, what people were, I think, expecting is a negative correlation between the stock market and crypto. What we have seen right now is that in the initial phases, that as more people become more fearful and they drive themselves to cash, as people take money out of the stock markets, they are also taking that opportunity to take some money out of crypto. It seems that way. Or it could just simply be that we've had a lot of financial engineering and decentralized finance solutions and lending products built up into the crypto markets, whereby when there's drastic changes in price, i.e. someone comes along and it's not the most liquid market, obviously Bitcoin has become very liquid over time, but nothing compared to traditional foreign exchange markets, then people can hit an order book, drive the price down, which then triggers some of these margin requirements on people that have been borrowing with their crypto as collateral, which requires those companies to sell off just in order to cover a margin call. And then you have a trickle-on effect. We saw something like this in the 1920s with the stock market, with the birth of derivatives. You can see similar things with this time in crypto markets. But the difference with the stock markets is that the stock markets are all built upon the traditional financial fiat system, which means that it's still built upon a Ponzi scheme of you not being able to own your own money, banks spending money as they choose, and over leveraging to push up stock markets, and the ability to inflate the money and have a dilution effect on the supply, which decreases the value of that currency over time. These products were built upon what appears that Bitcoin is becoming now is our world's best shot at achieving sound money. Now, that might be a controversial statement when you've seen Bitcoin crash from 20,000 to 3,000, back up to 14,000, and now down to 5,000. But I have been through markets like that over the last decade many times over. If you've seen any of my videos, you'll know that I've seen my, my $30 Bitcoin crash to $3. I've lived through my $1,250 Bitcoin crash to $250, and more recently in the last few years, $20,000 Bitcoin crash to $3,000, and then now $14,000 Bitcoin crash to $5,000. And this is normal in what I call a speculative store of value asset class, which is the world is trying to figure out whether Bitcoin can be a store of value. And the other interesting thing that we're seeing in these markets is that also precious metals have also crashed with the market as well. So the world is saying cash is king, and people are driving themselves over to cash. Now, what we have seen in, for example, in 2008, the immediate reaction to the financial crisis were obviously all stock markets crashing and all these other asset classes with it. But gold had a big correction at the beginning of the financial crisis in 2008. And Bitcoin is now acting similar to gold. Now, I know that's a controversial statement. You could look at the correlation between gold and Bitcoin. But I put gold and Bitcoin in similar buckets, but with a slight difference. One is that gold is a store of value. It's outside of the traditional financial system with the exception of all the derivatives and everything that's created in it. But it has another problem in that physical delivery, if you own the gold in your own safe, then it can act like some of the properties of Bitcoin, but it's very hard to transport and send around in times of crisis if you need to get money globally or across the world in an increasingly global world that we have right now. Whereas Bitcoin solves some of those problems in terms of transportability and the ability to send it globally, ease of storage, so that you don't have to go to a third party to store it. Now, many of you might have stored your Bitcoin in third party companies like Coinbase or other types of companies. Banks are now getting into the Bitcoin business. You might be storing it with those third parties, in which case there is a financial system being built around being collateralized by your holding, but other people taking control of that. And that's not where you want to be in the current market. You want to be in a situation where you have money that you own, that you can spend, and that has a fixed money supply to combat some of the forces as these markets unfold. So what are we going to see next? Now, obviously, coronavirus is a hugely problematic thing. Forget about, if any of you have had deaths or loss of family, then my heart's completely out with you for these troubling times. But in terms of the financial impact at the moment, is when people can't get out there and work, we're seeing a mass movement towards people working from home. So the businesses that were prepared for people to be able to work from home are the ones that are being able to continue unless their customers are affecting the business in terms of not being able to deal with their customers. And we're going to see a lot of innovation around that, around giving people the ability to work from home as a result of this. We're already seeing a lot of innovation in that space where lots of people might have thought they needed an office, but now they've suddenly figured out a way in which they don't need an office. But also, what essentially is the thing to look out for is not what happens to the stock market. The stock market, governments have shown that they are willing to use financial engineering to not allow the stock market to crash. That is uncharted, unprecedented territories that the governments will do anything to push stock markets up to new highs. And that is all perpetuated by debt. The stock markets are reliant upon quantitative easing, drive money into the corporate bond market, which is loans to corporations, which can then use corporate debt in order to buy back their stocks. And the people that are buying their actual products are consumers on debt. The vast majority of the world is on debt, and they're using debt-based products in order to consume. And so that's how the traditional monetary system works, that you have times of crisis that expose the systemic risk events. And then that leads to, events like right now, the world does not know, or the world may not know at this stage, that everyone's heard of Bitcoin, but the majority of the world see it as a speculative way of making money. when the reality of Bitcoin is it's the way of owning your own money, spending your own money, and combating the dilution of money that governments have as they print more and more in order to perpetuate the fiat-based Ponzi scheme. And the world may not know that right now. If the vast majority of the world is seeing it as just a speculative way of making money, then of course people are going to pull out of Bitcoin in times of uncertainty and in times of fear. You also have the innovation that I talked about, where a lot of financial products, where people are borrowing dollars against Bitcoin as collateral, and therefore those need to unwind in times of mass price movements and corrections. But the fundamentals of Bitcoin does not change. So what happens next? Well, if the economy enters into recession, remember a recession is essentially a reallocation of resources towards people not spending money on certain things and spending money on another thing, and people getting more conservative with how they use their funds and what they do with their funds. It is also a deflationary effect as people default on debt, because remember, money is debt. The entire economy is propped up by the amount of debt the economy has. If people default on their debt, money disappears from the economy because it was created as a loan at a private bank, which then exposes the financial system and the bank for what it is. It's perpetuating a fiat-based regulated Ponzi scheme. And so at some point, the effect has an effect on the traditional financial system. The governments will prop it up forever. They've shown that. They will do QE. I think in US, they're already doing a $1.5 trillion debt perpetuated stimulus in order to combat Corona. And the Fed is putting down their interest rates. They're using all their tools, but eventually these tools become ineffective and you have to look for some kind of financial engineering. Now, if you've watched my previous videos, you'll know that one of the financial engineering I talked about is a removal of debt by replacing fiat currencies with central bank created digital currencies. That tool is still there for every central bank to use. They can easily allow banks to go bust without you losing all your deposit by replacing your deposit with a central bank digital currency on a digital wallet. So I think that's the tool, the last resort tool that people will be using. But then at the same time, people will start to realize that there is this other force called Bitcoin. And as more and more of the traditional financial system exposes its weakness with you not being able to own your own money, where the bank owns your money and you have to get permission from the bank to use it and spend it, as more and more people realize that, these are the effects that Bitcoin is counter-cyclical to. It's not what we're seeing right now is that Bitcoin is not counter-cyclical to a stock market crash. We're seeing that the vast majority still think it's a speculative way of making money. Therefore, people pull money out at the same time as they are driven to cash. It's when people need and see a reason to own their own money, spend their own money in their own terms, spend it globally wherever they choose, and combat the fact that all of this debt is being pushed in order to combat deflation, because every time you have a deflationary effect, i.e. a recession, where prices go down, it's followed by a government's financial innovation, which is then followed by inflation. And so at this stage is when people start to realize. Now, at the same time, later this year, you have a contraction in the rate at which Bitcoin is created, called Bitcoin halving. And so what we essentially, what I'm looking for at the moment is a capitulation in people thinking that Bitcoin is no longer a store of value, because they're questioning it based upon the fact that it didn't correlate with the stock market and it crashed so far during a crisis event. Which means that those that have spare reserves, and I can't give you financial advice on what you're doing, but what I can say is that I'll be using this opportunity to accumulate Bitcoin at these lower prices, and expecting that there might be further crashes. So that means that I won't be taking all of my resources, putting everything into Bitcoin at one price. I'll be saving reserves for in case there is another flash crash, as people are more confused about what Bitcoin is in these times of uncertainty. So if we accumulating at 5,000 and there becomes another opportunity to accumulate at 3,000, then it's about using some kind of averaging way in, because you're not quite sure where the fear and uncertainty is going to take the market. At some point, by my estimation, the world's going to realize that it needs, the next effect after the financial crisis. So, well, firstly, we have a coronavirus crisis that exposes the financial system. So you have a stock market crash followed by a stimulus that gives people, essentially a deepening, moving their fear level down, which is markets are just driven by fear and greed. That's all they are. Every movement is fear and greed. That's all that drives the markets. But at some point, short term, at some point it diverts to fundamentals. But the next is that you will then see a tightening of people that decide to default on their debt, because the sensible strategy in a fiat-based Ponzi scheme, and I'm not saying that this is what you should be doing, but this is what a rational person would be thinking. The sensible thing to do in a fiat-based Ponzi scheme, where your money is being, diluted down in value as a result of money printing, is for you to default on your debt. And as people default on their debt, then you start to see the exposure of the financial system. The financial system, as more and more people default, you then have corrections in real estate, and real estate is what is 40% of all bank balances. When banks own your money, they use it in order to issue loans, and those loans are mainly 40% of them are from mortgages, lending people money to own their own property, because they can repossess those properties in times of defaulting on those debts. But this leads to a correction in the property and real estate markets, which is what governments are going to do all they can to try and prevent. But at some point, you have to have it. And then as people default on their debt, that exposes the banking system for what it is. And then you have challenges like we're seeing in other countries, where people are having withdrawal limits or capital controls, or they're not able to access their money and spend it in the way that they choose, or they're being given, like it is in certain countries, where they're giving monthly withdrawal limits, or they say you can't withdraw cash, or they implement these policies in the name of anti-money laundering normally. And then this exposes to people that they don't own their money. They can't spend their money as they choose, and they need something that can counteract the fact that our solution to everything is creating more debt. And that's when I think you start to see Bitcoin for what it is, that it's counter-cyclical, not necessarily to every type of uncertainty, but look at the first spikes you got in Bitcoin. It was when people realized that WikiLeaks was being censored by the banking system, and therefore they could use Bitcoin as uncensorable money. One use case. Then you look at what happened in Cyprus. In the Cyprus, they decided to bail in. In Greece, they tried to restrict access to funds. And you got a spike in Bitcoin because people started to realize they can spend it as they choose. And it is actually their money. Eventually, the world has to realize that there is this fixed money supply of Bitcoin and a scarcity in that. I'm predicting some radical things that you'll probably see over the next 5 years as we enter a game theory situation where every central bank is trying to create their own central bank digital currency. And the early adopters of Bitcoin that make announcements that they're actually holding some of their reserves in Bitcoin, i.e. the smaller countries that have more to gain than some of the larger dominating currencies that we have at the moment, start to announce that they are using Bitcoin as part of their reserves. And then you could even get radical things as central banks then have a game of chicken and game theory, where they're deciding, smaller central banks are always deciding. I covered this in many of my other videos. If you're taking this time you're not working at the moment and you fancy, putting on some education in terms of how you're going to speculate your way through this, then you can look at some of those previous videos. And then you end up with, essentially, you could see some really radical things where some central banks, the last ones to move, as others have moved first, and people start to discover that that there is options outside of their traditional financial system, can even do things like using QE, and rather than having a neutral portfolio or corporate bonds, can use some of those QE in order to purchase some Bitcoin or allocate some of their country's electricity to mining in a game theory currency war scenario, as the tension between countries gets more and more. So these are the types of things I think we're seeing in the world. Now, what I believe we need right now is, politics aside, this is where politics really should be pushed aside in order to have solidarity to, one, tackle some of the health issues that we're experiencing right now as a global economy. And then the game theory starts, and you're going to have to decide where you're allocating. Now, I know that it's not nice to think about speculating in a time like this, but the reality is that either you leave your money as it is and someone else speculates for you, or you speculate for yourself. What we can't get away from is the fact that we are speculating. If we hold money at cash at a bank, we're speculating on the credit risk of that bank and the regulations around it, and the fact that they don't have exposure to a fiat-based Ponzi scheme, which all banks do. If you're holding it in real estate and property, you're speculating that banks will still continue to pump their debt, your money, your debt, your pension, everything, into propping up real estate like we have over time. If you hold your money in Bitcoin, ultra volatile, but you're speculating on the world's desire to own their own money, have money that they can spend, and the fact that governments are probably going to print more, and a fixed money supply might be our world's best shot at achieving sound money. These are the types of speculations everyone has to make, but most people just leave that decision for someone else, in which case they will speculate for you, and that is what we call pension schemes, insurance schemes, and cash deposits at banks, and cash-based financial products, and bond markets where you're essentially betting on the credit risk of the government. So these are the things that, unfortunately, you're going to have to think about. Everyone has to get their head around where they're going to speculate, and also, whether they're going to, how much they're going to diversify in terms of different strategies, different approaches. So these are some of the things that I'm thinking about, and that's really what I guess at this stage, I think we can turn over to Famida, because I'm sure lots of questions have come in, and I'd like to cover some of your questions and see where we can take this. Are you there, Famida?
Yes, I am. Compiled quite a few questions.
Okay, well, let's take as many as we can.
Yep. Okay, cool. Yeah, Twitter has been really busy, really busy. And live chat has been really busy as well. It's been really great to see everyone here. I mean, it is a Sunday, so. Okay, cool. So the first question, I guess you've covered bits and bobs here, but this is all relevant, I guess. Do you think we are heading into a Great Depression like 1929?
In 8 years ago, there's a video on this YouTube channel, Simon Dixon's YouTube channel, where I released the video called The Great Depression of 2020s. And in that video, I talked about some of the things that I talked about earlier. It was originally recorded to a bunch of students at a university in London. I think it was Birkbeck University, or maybe somewhere else, about 300 students in London, telling them about how the financial system works, how the monetary system works. It's one of the very first videos on this YouTube channel. It was uploaded in 2011, and we were talking about Keynesian economics, and I was talking about how there's going to be debt-free money created that later became Bitcoin, and how we're going to have radical monetary reform. I believe that's going to be central bank digital currencies. The year that I gave, the estimation that I gave for some of these forces, because in 2008, we solved the problem of the financial crisis with the problem, i.e. we chucked more debt at debt. We had, the US had $2.4 trillion of debt at the time. I think it's now on 24 trillion or something, I lose count of the numbers, with $240 trillion of global debt. Also look at one of my old TEDx videos where I talked about the difference between a million, a billion, and a trillion, just so you can conceptualize how big those numbers are. But it was the video was titled the Great Depression of the 2020s. I do believe that this could be one type of force, but remember, the empowering thing about this is that we have had mass technological innovation that gives not just individuals opportunities, but also governments opportunities to make better fiat currencies. And so while we as Bitcoiners can't fathom the value of a central bank digital currency, because you can't own it, you can't spend it as you choose, and they will inflate it, it does create the opportunity to deleverage the entire economy out of debt-based money created by a bank and replace it with debt-free money created by a central bank that I talked about way back in the book Bank to the Future, Protect Your Future Before Governments Go Bust, which was published in about I think the first draft 2010, 2011 is in Mandarin and English. I'm not pushing the book because it's a highly outdated book. It was a long time ago. I never pushed the book. But I just want to, you can just go through my YouTube videos to get these things for free. It was that was the forecast that I was looking at. And I think this could be one of those events that can trigger a recession. But I think it's different from the Great Depression of the 1920s, because I think we're going to use financial engineering in order to tackle some of those forces faster. But we do need to deleverage the economy in a massive way. And that can only be done at the top level, and at the individual level, you can exit from the traditional financial system. Those options were not available to people in the 1930s, in the 1920s. And we did get radical banking reform in 1933, excuse me, with some of the Glass-Steagall Acts and various other things that separated investment banking and retail banking. We can't do what we did in 2008. That's one of the important things to remember. So I think this could be a trigger event, but I do think that we've got a set of tools that are available to us today, thanks to technology, that were never available, that allow us to react in a lot faster way. But we do need radical reforms.
All right, so the next question I have here is it possibly the end of fiat, as you have talked about? Is Bitcoin safe right now? I guess, is any cryptocurrency safe right now?
Nothing is safe right now. It's just different degrees of speculation on different time frames. So I could say to you something on a 10-year time frame, and if you're thinking on a 1-minute time frame, then what I'm saying isn't really relevant to you. So what you've got to add to that is a time horizon in which you're thinking about. If you're thinking about what to do in the very short term, most people are driving to cash is king. If you have spare cash is king, because at the end of the day, if you need to go out and buy things, cash is the way to do that. If you have spare reserves that you can make some more speculative decisions on, then I think cryptocurrency, and again, Bitcoin is in terms of sound money, my speculation is that Bitcoin's the only game in town. If you're talking about other things like Ethereum, that's a smart contract play. That's, in my estimation, disruption in capital markets. If you're talking about things like XRP, that's a play in Ripple trying to disrupt SWIFT, which has got nothing to do with, because SWIFT is a way of getting international money around in the fiat system. These are very different things. So a lot of confusion in the crypto markets is that people just think there's these things called cryptocurrencies. Well, and then you've got things that, tokens for companies. These are all plays on the network effect of a particular company or use case or something like that. Then you have DeFi solutions. You can't really put these things in the same thing. If you're talking from my perspective about sound money, then you're only talking about Bitcoin as opposed to other things. That's in my estimation. That's the way that I see it. So is Bitcoin safe? Again, Bitcoin gives you the ability to own your own money, spend your own money, and has a fixed money supply. Fiat money at the moment allows you to give your money to someone else to custody for you, i.e. a bank, And then depending on what happens, they might allow you to spend that money depending on the level. If you've got large sums of money, for example, there are people in countries like Liechtenstein, I think it was, maybe I'm getting that wrong. It's been so much news recently, and where they're only allowed to withdraw $400 a month. Now, if someone has 2.5 million of reserves in a bank in Liechtenstein, you can't move that for the next decade. You know, that's what can happen. So when you're talking about safety, what risk are you referring to? Are you talking about the credit risk? Are you talking about the risk of not being able to access? Are you talking about the risk of not being able to spend it as you choose? Are you talking about the risk of it being inflated away versus having a fixed supply? These are all different risks that you need to think in your head when you're deciding how much money do I hold in cash? How much do I put in real estate? You know, if you're, how much do I put in crypto or Bitcoin? And am I talking about the sound money use case, or am I talking about different use cases? So these are all, you know, decisions that you need to think through when deciding how to allocate your capital and how to protect yourself in different scenarios that can arise as this whole system unfolds.
So I've got a follow-on question from that, Simon.
Yeah.
So, I mean, like, so obviously you're talking about spreading risk, right? So how do you get the ratio? I mean, if you can suggest anything, or if there is any insight here, how do you suggest like a ratio? Like, how do you?
Again, I got to be awfully careful because there's not one size fits all. So if you are elderly and you'll be retiring or you're already retired and you have a life expectancy of a short time frame, how much speculation you can take depends upon your reserves, how much financial savings you have, how much exposure you have to the pension system. So if you're elderly and you're exposed to the pension system and you're dependent upon the government for your income, that's a very different scenario to a person that is in large sums of student debt. They can make different decisions. So a student in debt might decide that the right strategy is to default on their debt. That might be the right strategy and the right approach in order to get cash reserves. I'm not saying that that's the right thing for you. I'm just saying these are the different things. You can't blanket answer for everyone's situation is so unique, and that's why the problem is that, you know, there's a whole financial advisory industry built around that. But can you trust them? Because they're getting commissions off selling different products. You know, I know that there's lots of regulations around that so that you can. And most of them would tell you, you know, don't touch Bitcoin. That's a crazy, risky thing. A normal financial advisor would probably say that. So it's all about educating yourself. And this is why I think, you know, the one thing we do have today is more access to more education than we've ever had before, which is a complete gift. You know, that's a blessing that the people of our past never had. You know, I happen to be alive in a time when I was at school, it was books and pen. And then when I went to college, it was all computers. And then after I left university and got my degree, it was all internet and self-education. So I went through all those different eras just because of the year that I was born. But today we have access to more information than we've ever had before, which can be overwhelming. But at the same time, you've got to filter your information. And you've got to make your own decisions. This is personal responsibility. In terms of getting ratios, you've got to start looking at your personal situation and, you know, how much do you want in cash, recognizing that that can be exposed to the problems of the fiat currency system. How much do you want in speculative assets? How much do you want to access where no one can stop you from accessing it in a Trezor wallet held on your own, but is also at the mercy of, if you're paying your rent, then that will probably need to be paid in fiat currency. So you're at the, you know, can you ride out these price fluctuations and volatilities? These are all different questions based upon time horizons and you planning out your life.
Great, thanks for that. So the next question I have here is, does Bitcoin price correlation to stock markets worry you potentially at the beginnings of a prolonged crisis?
Yeah, so if you look at some of my previous videos, I talked about one of the videos, I forget which one, I've done so many. I talked about we're going to get the first test of whether Bitcoin is or isn't correlated to the stock market. And this is a hard one because this is such a, you know, a health-driven crisis is different to a financial crisis, right? In times like this, we all start to think about our health. You know, that is a different type of crisis, and drives people to different actions than if it was a purely financial banking crisis, which is also different to a pension crisis or a student card or credit card crisis. These people react in different ways to these different things. So if Bitcoin was more mature and more people understood it. So what we did is that Bitcoin just started. When I went to the very first Bitcoin conference in the room, the community was 40 people in a room, all deciding whether we could actually create something and push something forward that Satoshi Nakamoto invented and use it in order to counter some of the 2008 financial crisis issues. And it was also a computer science geek experiment, and obviously the fixed money supply became a really important thing. Over the last decade, the entire world heard about Bitcoin, which was an incredible achievement. In that conference, we never imagined that everyone in the world would have heard about Bitcoin. Now today, people don't know what it is. They probably think it's a Ponzi scheme, a scam, or a currency just for drug dealers, or something just to make money on. Now, people join for different reasons. So the original innovation and adoption was because of the gambling markets, because of censorship, because buying drugs online, and therefore that created a perception of what it is to many people. Later, they realized that it's a fixed money supply, so people start looking at store of value versus median of exchange. We've had debates over the years about what it should be. It can be all of these things eventually, but the opportunity in cryptocurrency is when it is a speculative store of value like Bitcoin is today, which is the world does not know whether it will achieve store of value status like gold. And therefore, the majority of the world don't think it will or don't know it will because they think it's a Ponzi scheme, a scam, or a currency just for drug dealers, or something that they just use in order to try and make more money. And therefore, you know, it's once everybody realizes all those things are not the case, that you can actually become a medium of exchange, store of value, and maybe even a unit of account, a global unit of account. So that's a bit more questionable. But it's these forces that people understanding that. I originally was asking the theory of, is the world ready to know that this is anti-correlated? Well, it turns out that I think not enough people know that Bitcoin allows you to own your own money, spend your own. We know that because most of it was at exchanges and at companies like Coinbase and companies where they own your crypto. So people don't know that yet. They don't know that that's the majority of the world don't know that that's what Bitcoin can do. It takes educational events, crisis events, unfortunately, because people wait to crisis to react until they actually learn what Bitcoin can be. And at that stage, I think you can get the full anti-correlation. But for now, I do believe at this stage right now, Bitcoin is not correlated to any kind of event that allows people to, where it exposes the fact that with fiat money, you don't own it, you can't spend it, and it gets ultra printed. So those are the types of events that I think you're going to see the anti-correlation. And I think we're about to see some of those events. And so if we're about to see some of those events, I think that can trigger a changing point in the Bitcoin market and people realizing and educating themselves that it's more than they thought.
So next question I have here is, so how do you make majority of people believe in Bitcoin, not just a speculation instrument?
Well, crisis is the answer. In every type of crisis, there's the opportunity to learn new things and do things differently. And unfortunately, as the majority of the world don't do things until they have to. And so I don't want the traditional financial system to be exposed for what it is. I'd rather financial engineering repair it. But unfortunately, that's not how the world works. You know, if you believe, going back to my economic theory, Schumpeterian destructive economics believes that in times of recessions, inefficient practices, processes, companies get taken over by more efficient, more reflective of the market need opportunities. And people need to recognize that a recession is reallocation of resources. That's what it is. It's inefficient processes that were subject to monopolies and propped up by, crony capitalism, exposing themselves and reallocating to new ways of doing things that are more reflective of how society wants things done today, and more modern trends. I think that those types of effects you will see with fiat currencies, but I also want, it would be a crazy, selfish world to live in for us to want the traditional financial system to go down in order for our Bitcoin position to be worth more. That's not a world that I want to live in. I want to see Bitcoin expose and give options and choices, and use the lessons from Bitcoin to create financial engineering to repair our over-indebted, Ponzi scheme regulated financial system. Because it's a lot of people do get hurt in these changes and trends when they don't react fast enough and in the right ways.
Oh, so my follow-on question to that would be, Simon, like, for example, the older generation or the younger generation that may actually be interested in cryptocurrency and are probably looking at it now because of what's happening, but they don't actually have the capital to invest. So how is one supposed to actually get involved and maybe actually start a new path in investing, or investing in their future and securing their future?
Yeah. Well, I can't solve the problem of how the world makes money. That's an individual decision that everyone needs to take, and they make their own choices based upon their own circumstances. Some people have better circumstances, some people have horrific circumstances. But the quick answer that I can give is the easier way to get involved in crypto if you don't have funds is to earn crypto, is to do things where people can pay you in crypto. And that is one way of doing it if you don't have the spare reserves to actually invest. But me having the answer to how people solve their personal financial situations in a world where everybody has different resources and different opportunities and access to different information is beyond anything I can control.
Thank you. Okay, cool. So the next question I have here, well, yeah, I guess it's a spin-off from what I just asked as well, I guess. Majority of people would still rather choose a government proposed remedy than Bitcoin.
Yep, the majority will. And then people will see the consequences of how people decide. If you're dependent upon a government, then you're subject to the credit risk of that government. And every government that I see, or most governments that I see, are under massive financial exposure and over indebtedness. And so if you're betting your future on over indebtedness being solved by more debt, then you need to look for radical financial innovation and financial reform of the traditional financial system and be a proponent for that. Because you can't solve a Ponzi scheme by chucking more debt at more debt. And if the government are starved of financial resources because they spend significantly more than they collect in taxes, then the only solution to that is financial engineering. And that's what we've been doing for decades and decades and decades.
Yeah, actually, so I have a question on that again, actually. So I've been reading what the UK government is doing now to counteract any kind of issues, like self-employed people are actually going to be quite affected by this recent crisis, and smaller companies, right? So now what people are questioning in like forums and stuff, they're just like saying, so why can't you just put a stop to mortgages? Like, why can't we just halt mortgage payments, or why can't we just halt paying the council tax for a bit? What do you think about that?
Again, I don't want to get too much into politics and outside of my area of expertise in terms of finance. In terms of the the government has consequences to every action it takes. The reality is that they don't have enough money to meet all of the promises that they make. That's a reality. And the world asks them to make more and more promises. And so if the world asks them to make more and more promises and says, I'll vote for you if you give me more, and they don't have enough, then all they can do is try and perpetuate the Ponzi scheme in order to meet the demands to get the votes. And that's how our entire world operates right now. A world asking for more and more and more, a government having to give more and more and more than they collect in taxes, and therefore they have to use the debt capital markets and stimulate debt and outsource money creation. The question that I have always asked, and that was the original question in the book, Bank to the Future, and what got me into monetary reform in the first place, is why don't they counteract outsourcing the creation of the money supply to the private banking sector and combat that? And that's the monetary reform argument. And then Bitcoin came along and created a new money supply, so you don't have to wait for governments to combat those effects. But governments can do whatever they choose to try and get short-term capital. But the fact is, you are starving a government of resources, asking them to spend more, take in less, and the only way they can fund that is through debt or printing more money. Debt and printing more money has consequences on everyone, everything, and it's a hidden tax.
All right, so next question I have here is, can we now stop that uncorrelated asset talk, which is obviously not true?
Well, again, let me return to the original question. Uncorrelated to what? So the fact that gold, Bitcoin, the stock markets, the bomb, all the different assets have corrected together in times of a health crisis doesn't necessarily mean that it's not true that it would be anti-correlated to a financial crisis. Because we've had a health crisis, you can't group that together that Bitcoin might not be anti-correlated to a financial crisis. So it's about us learning and understanding how people react and how people move. And what, at the end of the day, there are very, very wealthy people that have money that they're taking out of markets, putting into cash. And then as markets react, they're going to decide what to do with those cash. That time effect, that time horizon, at the same time as Bitcoin growing, it's very easy for me to be Peter Schiff, for example, and pull up a chart on one day when gold went up and Bitcoin went down and say, see, I told you so. But then he could do the same when Bitcoin goes down and gold goes up, and we can all do, see, I told you so. If you're talking about one day versus 1 year versus 10 years, we don't have the answers to these questions yet. These are theories, these are hypotheses. My hypothesis is that the world will need the ability to own its own money, spend its own money without censorship, and the world will look for a place which has a fixed money supply. I believe that's going to be more and more useful to more and more people over time. How long it takes the world to realize that, and when these correlation effects, depends on what you're talking about. So yes, I think right now we can say that Bitcoin is not, is maybe more correlated to the stock market, but let's see what happens. At the last financial crisis, gold crashed during the financial crisis, and one could say that was correlated to the stock market. It's all about anticipating different trends, and this is a highly speculative trend. The case is not solved yet. There's not enough data to solve that. And the difference between you getting that right or wrong will be the speculation and the differential in prices in the market as you believe something that maybe others people don't believe. That's all markets are: fear and greed. Fear, people are scared, somebody trying to make money, and that's what drives short-term prices. Fundamentals prevail in the long term.
Okay, so the next question I have here is, I would have expected crypto to be more resilient and maybe even benefit from the crash, but this doesn't seem to be the case. Has it become just another asset?
Same answer.
Yeah.
So, you know, if we don't know the story yet, what the test that I'm looking for is what happens to Bitcoin if we have financial crisis. At the moment, we've had a health crisis. At the moment, we've had a stock market correction with governments using more crony capitalism to prop it up. We haven't seen we haven't seen whether Bitcoin is counter to a financial crisis.
So I guess to go along with that, like with, I don't know if you can comment on this, but like with the US government or any other government potentially bailing out airlines, or, you know, I don't know, bailing out basically, isn't that going to affect, well, isn't that going to bring on a financial crisis, essentially?
Anything that, so what the government are trying to prevent is the financial crisis. The way they try to prevent the financial crisis is by preventing default of debt. Airlines are a very unprofitable business. They are have always been one of the worst type of investments because they operate off such tight margins. And when you have any kind of event like this, then it can lead to the bankruptcy of airlines. But airlines are also at the same time very important for people. I was extremely grateful that I had the opportunity to get back to where I wanted to get back to. And I would hate to be stuck in a country that I don't want to be in, as not having, you know, that. So what we're doing is we're confusing measures here. What we've got to look at is the government are trying to prevent a health crisis, give people the ability to get back home, and then also trying to figure out how you control the contraction of the virus in different countries. What they will do when it comes to health, clearly health has a higher priority to financial crisis. So they're in emergency mode to solve that one. And the way they're doing it is they are printing more money, which has consequences later down the line. And because they've gone so far with the Ponzi scheme, it doesn't make any difference if they just push it a little bit further and a little bit further and a little bit further to solve the immediate problem. At some point, we need radical reform, and that's not going to happen at a time of a health crisis. At the moment, it's just solving what's on front of mind. You know, if we're alive is obviously a more important question than if we have money. And then the next question is what happened? What are the consequences? That's where I think Bitcoin starts to have more of an important effect, as people have an option after they get past their immediate health, after we get past immediate health crisis. What are the consequences? And these are speculations that people need to make, and we have options now that we didn't have before.
Great. I'm just gonna scroll through a little through our questions. We have reached an hour. How are you feeling, Simon?
I'm okay for now, actually. I'm pretty good. I'll go until you need to go, or the questions are dying down a bit, or or my voice is stopping.
Okay, so
should we pick some of the more recent ones, because maybe they were from earlier? I'm not sure. Were they more?
Oh, these ones I'm actually reading from Twitter, and these ones came in early, like before we actually went live.
Okay.
Yeah.
I don't know if we can go to the live chat or.
Yeah. I've pulled out a lot of the live chat questions as well.
Cool.
But there is lots to travel through. Yeah. Have you got any comments about Bank of England at the moment?
In regards to what particular things? So Bank of England have been doing the things. So firstly,
CBDCs, the discussion on paper, there's something that was published.
Not too sure on that particular one. I think they're talking about the fact that, so one of the original organizations that I was involved in before Bitcoin was the monetary reform movement. That later led to an organization called Positive Money that was looking at how they can counter the effect that how central banks can counter the debt-based Ponzi scheme. And funnily enough, the person that started that now works at the Bank of England in the digital currency section. I had a debate with him a long time ago. I think it was 2013, an event in London where he was saying that Bitcoin's a Ponzi scheme. And I was saying the Bank of England's a Ponzi scheme. But essentially, the Bank of England actually invented the Ponzi scheme. So it was 1694 that the Bank of England was created in order to fund wars and lend money to governments so that they could get governments into debt so that it could fund wars. And that perpetuated the very birth of government debt and the Ponzi scheme. It was not until 1913 that the Federal Reserve copied the Bank of England system and perpetuated the Ponzi scheme across America. And way before that, many other central banks across Europe copied the Bank of England. And now we have central banking and debt-based, and China way more recently started to adopt central banking stimulus into their economic system of organizing their economy. So we're now in a global system thanks to the Bank of England. And now Bank of England is finally looking at central bank digital currencies as a protective measure, as a new money supply that I call a debt-free money supply. They're not using these words, but a central bank digital currency, I think, is a debt-free money supply that I think will be a horrible form of money, but a better, I guess. So we got two different forces here. You've got economic freedom, privacy, and then you have sustainability of a financial system. The debt-based financial system, whereby we outsource, central banks outsource the ability to create money every time banks issue a loan, and banks benefit from the creation of new digital money. That is a Ponzi scheme and completely unsustainable. But at the same time, it creates a bit more privacy and a bit more freedom, because at least money is one step removed from the central bank. Central bank digital currencies are not debt-based money. And therefore they're not a debt-based Ponzi scheme. However, the money that they will create will have a much worse effect on your personal freedom and privacy, because essentially you're plugging two government systems together, and all the governments around the world will want to automate tax collection. And in a global environment where you might be doing a deal where you're a citizen in one country or resident in one country, but you might have traveled somewhere else to do the deal with somebody that was from another country, and there's three governments that all think that you owe them tax. And therefore they automate through their APIs and central bank digital currency the collection of that funds, and you're stuck in a country because it switches off your passport because you're arguing with three different governments that all think that you were meant to give them their tax. This is what the result of central bank digital currencies will be. But in terms of sustainability, it's not a Ponzi scheme. And people, at least you can have transparent money whereby you know the supply, you know whether they're inflating or deflating, and you don't have this complexity of the horrible financial system we have now of all these different types of money, M0, M1, M2, M3, M4, and nobody knows that the central bank has actually outsourced the creation of digital currency to the private banking sector, and it's running a debt-based Ponzi scheme. So these are the two different forces that you'll see. So absolutely, every central bank in the world is nuts if they're not working on their central bank digital currency right now. Do we need it? It's an inevitable, I believe, inevitable, predictable, and guaranteed, because they'll use it to allow banks to go bust in the future, replace debt-based bank-created money with central bank digital currency. And then we have a more competing market where companies like, you will just decide what's important to you? Is having complete privacy over certain money important to you? Well, there'll be options for that. Do you want a very convenient way of interacting in the social network? Well, Facebook will have its own cryptocurrency for that. Do you want to have an easy way of paying your tax automatically? Then you will keep that money in digital, central bank digital currency. What's coming is more options, more solutions. And as we expose the weakness of the financial system, new money supplies will come into existence from both individuals, from corporations, from governments, from central banks, and from open source projects like Bitcoin, that I don't think we'll see too many of, or more like it.
Yeah, so actually in the live chat, someone's actually mentioned Venezuela and the hyperinflation. If you have any comments on that.
Yeah, so Venezuela is, it's a classic example of the people out there that are so selfish to believe that Bitcoin is only for someone in a developed country like the UK, where you have access to credit, you have access to a social, a social system, you have access to a government that gives you free healthcare and free resources depending on your situation and your financial situation. For them to say that Bitcoin shouldn't exist when you have countries like Venezuela where it's life and death because they have different government regimes that are inflating currencies to the point where you can't afford to buy food because the value of the money that you earned is not enough to make a purchase in the time that you actually earned it versus spending it, which is destructive on people's, imagine your lifetime savings disappearing after a whole lifetime of believing that you were doing the right thing, just as a result of measures that a government takes to print more money in a in a bad way. At the same time, they obviously have their sanctions that they're fighting as well in the political arena. And to say that they don't deserve to be able to own some Bitcoin because you in the UK or believe that you don't need it because it's you've got a bank account and you're okay and you don't see the need for it, really is an opportunity for us to question, this isn't just about us. This is about many other people in many different situations. And the fact that people now have the choice to own their own money, spend their own money, and have a counterforce to that, the money supply will never change in Bitcoin if the code works as it is intended. It's a difficult question because Bitcoin, if you're spending money in a fiat currency and you're on the breadline, you obviously can't afford volatility. However, there is a whole Bitcoin economy that's emerging where you can mine Bitcoin, earn Bitcoin, and spend Bitcoin in that economy. But obviously, it doesn't cover on the ground your rent, all these different things. And so, these are tricky questions. That the opportunity here, though, to have the choice, and for someone, some government agency, some individual that just hates Bitcoin to say the world shouldn't have it, shouldn't have that choice, just because your personal circumstances means that you don't need it. It gives us a great opportunity to really contrast our situation. And Venezuela is a great country for people to, understand the situation on the ground, how this affects political decisions, how it affects individuals. And whether it's good for them or not, is a choice for those individuals to be able to make. And there's many videos out there. I've seen great videos of people that are pushing the crypto community in Venezuela and the effects that that's having in terms of certain people in certain demographics.
Yeah, so can you comment? So someone's actually asked about governments accumulating Bitcoins. Do you have any comments on that?
Every sensible government now it's easier for me. I can't give financial advice to individuals because those are deeply regulated things. But as supernormal bodies, governments, I personally believe that there is a game of chicken that needs to happen with governments accumulating Bitcoin. I believe that governments should be allocating a part of their energy resources to mining as a hedge. And I believe that central banks should be using Bitcoin as part of their reserves, because the risk reward is so high versus the risk of it not working for a government or a central bank. And this type of currency war at the highest level can dictate, we've seen countries that have government agencies have confiscated Bitcoin, like the FBI confiscated the Silk Road Bitcoins, sold them off to a venture capitalist in Silicon Valley, the Winklevoss twins and Tim Draper and Digital Currency Group and all these people that made the most profitable trade that outperformed all markets. And the FBI could have had those resources. Instead, they got 24 trillion debt. Governments are going to realize these things. I know most people are doing it at the individual level, but I think at the institutional, organizational level, these are bets that the organizations and governments are going to have to be making over the next decade ahead. I know that the smaller countries, having spoke to many different people, it's hard to say what is a government. A government is lots of different organizations with lots of different people with lots of different competing interests. So it's very hard to generalize and say a government is this, because there's so many different parts to it. It's like the Federal Reserve is like, it's essentially a conglomerate, a private conglomerate of the banks that's put into different quasi federal institutions that have the word federal in front of it to make people think it's a part of the government. But really, that's why Donald Trump is arguing with the Fed right now, because essentially it's a private company that is out for the interest of the private banking sector called financial stability. Well, if they were, then they'd be creating their own central bank digital currencies, allowing banks to go bust and figuring out a way of deleveraging the economy without inflation, deflation, and having radical banking reform and allowing an open market of competition between private blockchains, public blockchains. And I think I know which one would be the choice for many people.
Okay, so the next question I have here is, I believe there are risks in crypto exchanges due to the new bail-in laws, allowing failing banks to take hundreds of millions of dollars exchange cash accounts. Do you agree?
Exchanges are banks. Banks are exchanges. They operate off slightly different rules. So remember, if you hold your cryptocurrency at an exchange, Mt. Gox was one of the very early examples. They own your Bitcoin. It's not your Bitcoin. They just promise that it is your Bitcoin. If they choose to spend it on something else, like speculating on other cryptocurrencies, on ICOs, or lending to DeFi products that are subject to certain margin calls when there's changes, then the exchange can do that with those Bitcoins. They can spend it as they choose. They may be committing fraud. There's gray areas in terms of depending on different jurisdictions. And as we saw with Mt. Gox, they can create more Bitcoin than actually exists. They can create artificial Bitcoin at the exchange where they owe X amount of real Bitcoin and have more on balance. So exchanges are unlicensed banks, and they can, depending on their regulatory regime or how much they embrace blockchain technology, or whether they're decentralized or centralized, have different degrees of whether they're a bank or not. But officially, they're not meant to be doing any of those things without having a banking license and be subject to banking regulations, which then makes it illegal for you to operate a Ponzi scheme. Sorry, legal. A banking license is a legalized Ponzi scheme. where you can do that under the supervision of a regulator.
Great. I've actually just had a question come through on the live chat, and they're asking if you can comment on Ethereum.
Ethereum, from my perspective, is becoming a very interesting protocol for decentralized finance, which I think is hugely interesting. We have just seen the first major test of decentralized finance with things like MakerDAO having to do many margin calls, and other companies having to do, more centralized companies having to do margin calls as the price corrects, because you are collateralizing it and gambling that those movements won't actually happen. Otherwise, they have to do the call and they have to sell the Bitcoin in order to cover the fiat loan. Ethereum has an incredible development community. They have a network effect in terms of developers that no other protocol has. It is not any shot at achieving sound money, in my perspective. You might use it as a medium of exchange in order to, pay people, but it's not. It's not the same strict money supply as sound money as Bitcoin, so it's a different use case. And it operates off a more innovation, less conservatism approach. And you're at the mercy of the Ethereum Foundation in terms of what changes they're going to make ahead. So that's just a different profile. It's not that Ethereum's bad or Bitcoin's good. It's that Bitcoin is the world's best shot we have, in my perspective, of achieving sound money with very important conservative policies. And Ethereum is a more innovative platform for achieving decentralized finance, securities, the rebirth of capital markets on blockchains, and the most buoyant development community out of all the blockchains in order to achieve that. And regulators, important regulators like the SEC, saying that it's sufficiently decentralized enough to be used as a public blockchain for the utility of people that want to build on top of it. So that's my perspective on Ethereum, and I think it opens up interesting opportunities for things that can't be done upon Bitcoin, because Bitcoin was never designed to do that. Bitcoin was designed to do one thing very well, which is the world's best shot at receiving sound money and transferring money globally that you own, that you can spend as you choose, without having to go through a third party.
Cool. I think we're gonna start winding down in a bit. There are loads of questions, and I think maybe we can cover some of them at another stage, maybe. So someone's actually asking you to comment on Cardano.
No comment. It's the everything else is speculation. You can look as you go further and further down. These thousands and thousands of different things. They're different things. They just it's you're trusting a group of people's ability to release something that hasn't been released yet. If you've got spare reserves to speculate on such things, then they might make higher returns for you than the less speculative stuff. And they might produce innovation that disrupts the existing innovation. But we could just list off a million things that are all doing similar things and trying to disrupt each other. And I don't have much comment on that.
No worries. I thought I should ask because they hashtagged it like 5 times in the chat.
What you got to remember with cryptocurrency is that everyone's a bag holder of something, and everybody. The reason that you take Ripple for example. Sorry, I should disclose I'm free bank to the future. I'm a shareholder in Ripple, but nobody has ever in the history of humankind been passionate about banking technology. But as soon as you introduce a cryptocurrency, because people hold the XRP, it creates this community and network effect where the people that hold it are financially incentivized to promote things. So in crypto Twitter, everyone's just trying to push their own bags, essentially. At some point, you need to try and filter between people just pushing their own things to try and make more money versus people that are actually out there to try and push something that they genuinely believe in. And that's a tricky one to achieve in crypto Twitter. But people are hashtagging things like crazy because they want me to mention something because they're looking out for their self-interest so that they can make some more money out of something pumping. You have to see through all the bullshit.
Nice. Thank you for that. So I have a question here from Twitter. The effects of the repo crisis on crypto, and will Bitcoin follow the Dow in bounce to new highs?
Again, I can't comment on short-term trends because I'm not. I used to be a market maker when I worked at an investment bank. So and my job was to do short-term market making. I know the game that market makers play. Market makers make money consistently out of the 90% of speculators that lose money. Insiders make money. We say that there's all these regulations around things. These regulations exist, but the financial markets for the short term is the 10% of insiders, market makers, people that have access to information that others don't, making money out of the 90% that are trying to make money. And so, I know the trading game. If you want to start talking about short-term trends, then go and watch the people out there that do technical analysis. I'm not one of those. I know technical analysis. I used to use it, but I gave up the trading game a long time ago to focus on the investing game, because that's where people can make money. 90% of traders lose money. It's just a reality. You try and play that game, it's a hard game to play. Fundamentals prevail, which is why investors, there are so many more successful investors than there are successful traders. Let's just put it that way. And I'm not here to speculate on the short term. You got to take time horizon that's right for you based upon your circumstance and speculate and position based upon what you think those trends are going to be. Or if you want to be a trader, then be a trader, but you've got to be a 10%er that make money out of the 90%. And most of them require an edge and an insight, and it's not going to be done from technical analysis.
Okay, if you don't mind, Simon, I think we might just wind this down now, and I guess it'll be good to hear your thoughts on what we should do now and how we should move forward, or how we can move forward.
Yeah. So I guess the closing message from my side is I'd love to do more of these. I'm actually currently investing in building a studio. As I said, if you watch this from the beginning, thank you for staying with me all this time. But I'm currently doing a lot of work on the house and building out a studio so that I can give more content more easily. I found that I procrastinate on giving content when I can't create it easily. And then everyone starts criticizing me for holding up an iPhone and having a shaky phone and all these types of things. I'm gonna want to give a lot more content, and I'm investing in a studio to make that a lot better in the quality. I will look forward to taking it. It appears that there's a massive appetite for people to be able to get questions answered. And I think that we all in these times, and the question that I'm asking myself is, we all have different unique skills, and we all have unique positions and unique perspectives. But in times like this, how can we be of service? From my perspective, I can try and give service by helping people understand some of these financial trends, because it's what I've obsessed with my entire life, and helping people understand the unique value that Bitcoin brings to the market and how important that is. But in times like this, I think we should all, we have two choices. We either wallow in all of the shit and misery that we can get out and we can try and find, or we can try and find problems and create unique solutions to those and empower ourselves to serve other people in better ways. And I think in times like this, let's put aside some of the agendas, let's put aside some of the politics that will come back later. But it's all about how can we add value, how can we serve, and sometimes we need to think beyond ourselves in order to really help in situations like this. So I challenge you to think of those things, and I'll try and create more content. I will at some stage go through some of the different tweets that we missed and didn't cover and see if we can create more content on that. And remember, economic uncertainty is simply a reallocation of resources. And a reallocation of resources means that when resources get starved from one place, they go into a new thing. And so you as an individual, you've got to start thinking about some of these new trends and use this opportunity to start thinking about how you're going to do things differently. You know, those are the types of things that I think are worth looking at, so that you can empower yourself in times like this. So thank you for your time. For me to thank you for pulling out those questions. Yeah, you got up early on a Sunday, you know, you know, thank you to all the team and everybody in Oman for putting this all together. And we'll try and do more of these as we can, hopefully in more social hours rather than a Sunday morning. So over and out, that's all I got for you. Thanks, Amita.